All right, Alex Wesdorf, welcome back to the Roadmap to Retirement podcast.
This is Roadmap to Retirement. Tune in for financial tips, investment strategies, and smart money moves to supercharge your retirement savings. Alex Neri, CFP, and guests are here to help you build your roadmap to retirement.
Thanks
How
for
we
having me
doing?
again. Doing great, man. Doing great. Had a little run this morning, like I said. I hate running, and but it's good for me to do things I
Right.
hate.
You were just telling me that you ran 15 miles this morning. That's very impressive.
It's not,
You
it's
did
not.
all of it at a 7-minute pace.
Yeah, I'm basically on track to do an awesome marathon in the future. Yeah, absolutely.
Awesome. I've trained for 2 marathons and done 0 of them, so things are going well.
That's impressive that you've actually trained. I've done a 3 miler today, and I'm dying. So,
Yeah, so not a marathon, half marathon. So I was going to do a half marathon that was scheduled for April of 2020. And then
okay.
about 3 weeks before the race, they canceled it. And I was like, why? We're just flattening the curve. This is going to be done in 2 weeks because
Yeah,
that's what my governor told me.
that's
But
right.
I'm not bitter. So that's not
Yeah.
why we're here to talk. Maybe it is. So let's say that I have an injury from running this half marathon and I can no longer go to work. What happens?
Yeah, the probability of you probably being injured for every disability policy has a waiting period. Usually it's 90 days. So when I think of like an injury, which we've all sustained, unfortunately, from exercising, it appears by talking to you and you talking to me, you're probably not going to be on claim for very long. If you suffer an injury, that's going to prevent you from doing your job. You think of your daily duties, podcasting, talking to people about finances. You can sit in a chair with a leg up on the desk with a cast or pulled hamstring and all. So I think that's a good segue into what is a disability
That's such
because
a
I
bad
think
segue. I just used my failed half marathon training to segue to you to talk about disability insurance. I didn't even tell the listeners why we're here today. We're
yeah,
here to talk
well,
about disability insurance. Is that right?
yeah, that's right. We're talking about the thing that everybody hates to talk about, which is disability insurance or
Okay,
insurance
everyone
in
just turned
general.
the podcast off. They're like, this guy's gonna
That's
talk
right.
about insurance. I'm out. So thank you for that.
Yeah.
Anyway, you were saying, so my example of I got injured running, I hurt my ankle, let's say, but I'm a financial advisor. My job is to sit here and talk to people about their money all day. I can't really make a disability claim on that.
No, I don't think many people can. Again, you have a waiting period. Look at it as like a deductible for your like your health insurance plan. Like you have to be out of work for an extended period of time before the long-term play comes in. There's short-term disability plans, no doubt. In your example, I would say that you're not going to file a claim because maybe you're out for a couple days, but realistically, you're probably coming into work the next day with a messed up hamstring or whatever your injury is because you can do your job from your desk. I think that's the biggest hurdle that I face in the disability industry is just the psychology and an understanding of what is a disability. And the majority of disabilities come from a sickness. So people do get hurt. They do get severely hurt. You think of like a car accident or something like that. Like obviously that happens to people, but the probability of you getting in a car accident is like one in, I think 90, something around there. We'll see what the data is. If you're in a city like New York versus Des Moines, Iowa, where I'm at, maybe it's a little bit higher because of traffic and everything. We don't have that here. But I'm not necessarily even worried about the car accident for the individual. I'm really worried about the reality that 1 in 4 of today's 20-year-olds become disabled, and that's going to be due to a sickness more than likely.
Okay. Let's assume our audience is a lot of people like myself. I don't know that it is, but let's say white collar people that really we don't need our bodies, right? My body can break down. I can still do my job, but I could have a cognitive issue. I can get hit in the head with a golf ball next time I'm on the course, and I can't do numbers anymore. Or I can't talk the way that so now I'm disabled. So what does that look like?
I just think that that is the biggest hurdle I face in today's marketplace when I'm talking to someone that is either a client or a financial advisor themselves. They're sitting at a computer all day. What's going to prevent me from doing my job? And that's a valid question, but it's coming from a place of an misunderstanding of what disability is. Again, if you have a stroke or you suffer a heart attack or you get cancer and you have to go fight it, and you're going through chemo, radiation, there's a real possibility that you're not going to be able to do your job. This is cognitively, obviously, that's your biggest thing. Your brain's your money maker. You start losing the ability to perform some of those duties, like in those instances, like MS or whatever it may be. That's where it really comes into play. And that's where you see the majority of claims coming from. It's not 10% of claims, like I said, is due to a severe injury. So whether you're a doctor, dentist, financial advisor, wholesaler, it doesn't matter. We have to be able to cognitively do our job, but also the sickness that you're going to treat might take just time. Like one quick story I have is I had someone die this year that I knew of that was locally here after battling cancer for the last 4 years, and he was a teacher, right? And so again, think of a teacher, their daily duties. Again, not they're not dissimilar to you and me, but the cancer was aggressive and he lasted 4 years, which is great. The amount of GoFundMe's that came through year over year were numerous because he doesn't have enough. He doesn't have a plan. I don't know what his plan was. I didn't know what his financial plan was or anything like that. But GoFundMe's happen because there's a lack of financial resources for that person because they're going through a hardship, ongoing hardship. And so that individual battling cancer for 4 years and then dies, and that's a possibility. So that's why risk protection is such a valid conversation to have with young people earlier versus later, especially.
Sure. So let's more of a real example. I find that the biggest opportunity for, no, that's not the right way to phrase it, but the biggest gap in those financial plans is often those people that are self-employed, where they don't have any disability insurance at all because it's on them to get it. They don't have any life insurance at all, it's on them to get it. They might not have any kind of retirement account because the only way that happens is if they go and set it up. Whereas if
Yep.
you're a typical W-2 employee, you start at a place and you have a 401k with a match day one, you've got a health insurance benefit, you've got a life insurance death benefit that's at least something. You probably sometimes get a disability coverage that's maybe 60% or something like that. So if we're talking to the self-employed person, and maybe I'm a good example of this, if I don't go out there and set it up, I don't have it at all.
Yep.
But if I'm self-employed, maybe I own a business that has some value. I know the financial advisor world, so let me just use that as an example. Let's say
Yep.
that financial advisor out there that does $1 million of revenue a year. If something were to happen and they got disabled, they do have the option to sell their business still. So
Yes.
maybe they sell it for a three times multiple. So they got $3 million that's coming into their household.
Yep.
Not insignificant, right? That is money that can offset medical bills. That is money that can set up the surviving spouse should they not survive the disability. So how do you approach like the self-employed person? And this is a long question, and a lot of it depends on it.
Yeah.
But how do you
Yeah.
approach that person and say, realistically, we're probably not going to insure the full like $1 million of revenue you're doing a year because that's going to be a hell of a bill. So we want to insure part of that because we also have the knowledge that there's a value there that you can sell and walk away from.
Yep. Yeah.
Long
That's
question.
Yeah, long question. I work with a lot of financial advisors, especially this year through LinkedIn, who have bought a policy themselves. And the reason I do is, do you want to come up with the cash yourself at the time of need, or do you want to transfer that risk to the insurance carrier? That's the question, right? Now, if you have $1 million of revenue coming in, one thing I always say is that you are the revenue stream, right? And obviously there's renewals, there's a lot of nuance probably in there. And today you could sell that for 3 times multiplier. But if you're in it for a little bit, but you're like maybe you're lagging, right? You're losing clients, maybe that's a possibility, right? If you can't show up for these clients, they might say, "Hey, Alex, you're a good dude, but you're going through stuff. I can't even get a hold of you. You're in a hospital in Rochester all the time, right? Because you're battling with cancer." That's a real possibility of you losing revenue, not because you're doing a bad job, because you can't do your job
Right. Well,
effectively.
there's not to cut you off, but there's a good point in there too that I'm assuming there's a three times multiple on my business because that's like kind of the industry standard. But that assumes that you're around to do like a warm introduction to the buyer. So if you're
Yes.
laying in a hospital bed, you can't really go meet with your 200 clients to say, "Hey, here's the guy taking my place." So now that multiple probably drops from 3% to I don't know 1.5, something like that.
Yeah, you're creating a fire sale. Like every single business owner, especially a small business owner, you are the revenue stream. And so, like, you've probably talked with plenty of business owners who are like, dude, I can go sell my business today and I'd be totally fine. That's true today when you're healthy and you are in there to gradually get out of the business, right? Because that term gradually is, usually you see a 5 year before someone fully is out, right? Where they're bringing you in to meet all their new clients as you're buying a book of business. If that's not the case, then I'm not going to come by your business when you're flailing or unfortunately due to your sickness or severe injury because I can know that I could probably buy it for cheaper if I wait a year. And that sounds horrible, but that's true. And so that's why I tell people you insure what you can't afford to lose. And do you want to transfer that risk to an insurance carrier? You don't have to insure everything, but you better have a plan because if it does happen to you, I'm not buying your business for what it's worth today if in a year that I know it's not going to be worth that because clients will leave you.
Sure.
Maybe they just come to me. If I'm a different financial advisor and I know that this is terrible, this is a lot of hypotheticals here, but if I see that you're not being able to do your job and people are disgruntled and I find out about that, why not just let the client come to me?
Yeah, that might be different by markets too. Because here,
Yeah,
a billion financial advisors. If I'm in a small town in Iowa, maybe I'm the only other guy in town. So
you
they're
might be the only Edward Jones guy in town. That's a
yeah,
possibility.
okay. So they come your way. All right, cool. So that's addressing a very specific niche of financial advisors, which again, I picked it as an example because that's the world I live in. So let's say that we're not in the self-employed space. Let's say that I don't know, I'm a nurse, I'm a healthcare provider, I'm a teacher, I'm a W-2 employee somewhere. And it seems like 90% of those people do have some disability insurance through their employer. So they're in this spot where if they don't address it at all, they're not completely screwed in the what if situation because there is something there. But then you're having a conversation of, I work at a hospital making $100,000 a year. I get disabled, and now I've got maybe 60% of that. That's $60,000 a year. Oh, by the way, that's also probably taxable, depending on the plan, but most of the time that's going to be taxable. So I'm paying taxes on $60,000 a year. Maybe it looks like $40,000 a year is what's actually coming to my household after that. Is my math okay?
Yeah, your math's pretty good. I think
Okay.
that the problem with group benefits is that, yes, they're given to you, but they're given to you in a wide variety of ways, right? If the amount of times I've reviewed a benefit booklet for people just simply on the life insurance and disability insurance, they are in shock with what they actually have and what they really don't have. Like last week, I was talking with a doctor that was making $350,000 in California, and I'm like, hey, dude, if you die, you get 100 grand. Your wife gets 100 grand rather. You live in Northern California, 100 grand doesn't go very far in Des Moines, Iowa. I cannot imagine where it does in Northern California.
One
And he's
more.
like, man, I didn't, yeah, I didn't know. I didn't know. I just didn't know. And so we can't assume that people actually read the benefits that they're enrolling in right now. We have to actually do our due diligence and for them because, these we have AI is great, but a lot of the people especially when I was at the carrier, like I'd get my benefit, I just auto enrolled. I didn't know what it was. I knew I had something. And that was one of the reasons I didn't buy disability insurance when I was 24 years old, is because I knew I had something and I assumed it was going to be good enough. And I didn't want to privately go purchase my own thing. And it wasn't until I literally was confronted with, hey, what do you have? And I had no idea. Again, I'm at a carrier, so I should know. I know group benefits to a degree at this point, and I just didn't. And so your math is right. Generally speaking, if you have group long-term disability, it's generally 60% of your income, of your monthly
There's,
income.
there's a mistake a lot of people, we hear it a lot is when you're a young financial advisor and starting the business and you're just trying to like bring on any clients that can fog a mirror, you hear a lot of the I'm all set when you approach
Yep.
somebody about it.
Yep.
And it's funny, we make a joke out of it, but it's just the default answer that you get when you have something in place. Like when it comes to financial planning, it's, oh, I've got a 401k at work, therefore I'm all set. And when you think about insurance, it's, I know I got that packet from them when I signed up, or HR
Yep.
gave me a newsletter saying I have something, so I'm all set. And it's you let good get in the way of great in a sense. Like
Yeah.
you think you have something, so you're not even going to talk about it. Whereas maybe that self-employed person I was talking about before, because they know they have zero, if someone like you is having a conversation with them, like they know they need to address it, and they're going to use the expert saying, Alex, what do I need here? And they can get a more robust policy that actually meets their needs.
Yeah, I think the conversation is easier with someone that is self-employed because they know they have absolutely nothing. It is a harder
They
uphill
also think they're
battle.
Superman. They're never going to get hurt. They're going to sell their business for millions of dollars. And
Yeah, I would say that the average male that I talk to under the age of 40 is Superman. And so there's a psychology there, right? Especially if you're in the white collar like space like you or myself, where what can really knock me out? What's my kryptonite? I don't think I have one. And I'm like, hey, are you immune to a stroke or a heart attack? And I'm not insuring the person today that in an event they might get sick tomorrow. I'm insuring them today where in the event they might get sick later in their working career, where we see predominantly, especially in males, heart attacks, strokes, and the types of cancer that we endure is usually in the mid 40s. So I'm insuring you today because it's cheaper and you're healthier for the future that where you're not as healthy and just things happen. But going back to the group LTD, there's two problems with group LTD outside of just definitions and all that stuff. Number one, it is 60% of your monthly income. And if your employer pays for it, it is a taxable event once you receive. So the way I do it for people, just to make math easy, is I say, let's say you're a W-2 employee, you make 120 grand a month, 120 grand a year, sorry. That means you make $10,000 on a gross basis. That means when you go on claim, you're getting 6 grand. That's what you're going to get. And then you will pay taxes on that 6 grand. And so let's say your net's 4,500 bucks. The question isn't, is 60% enough or are you good? The question is, will it be enough when you have medical bills coming in that you weren't projecting. You can start to remove some of the things of your life that maybe are optional. They're variable expenses like subscription services, dining out, coffee, but there are just fixed expenses that you cannot change. And now you have new ones coming in. And I posted yesterday on LinkedIn that the rainy day fund is set up for a big expense at a random occurrence. So your car breaks down, your furnace goes out. Disability is something that doesn't just happen and then goes away. It's an ongoing process that you have to continue to fund. And so that's what I want people to think about with that. On the other side of the group LTD, so that's that 120 getting 10 and 6. There's always a cap on group long-term disability. And so if you are a high earner, you need to really look at that. Like the amount of times I see people that make 200 plus $1,000 and their group long-term disability is $6,000 a month. That's the cap. Again, they just don't know what they don't know. They're like, hey, I'm getting 60% of my income, which we already know that's not enough. But now you have a cap. You're making 200 grand and you're getting $6,000 a month taxable. And they're like, oh my gosh, I never knew this. And shame on us in the industry. There's so many things to educate people on when it comes to their benefit package as an advisor, like an ESOP plan, a stock purchasing program. That'd be amazing. Like people, everybody should do that, but nobody knows that's even an option because they're not educated on it. And so I want people to think about when I run the numbers and I show you just, hey, if you will go up for on claim for 2 years and you're getting 60% of your income, what you're forfeiting for retirement because you have a loss of income that you no longer can invest as well in a market that's compounding for you. We don't want to miss out on that.
Yeah, I kind of want to go back to what you were talking about a little bit earlier, and you had mentioned just like the other changes to your life that happen along with the disability. So it's easy to picture yourself in your example going from $10,000 a month to $6,000 a month. You think, okay, I could cut back on some things, but they're not thinking about what's added to that. So like
Yeah.
if I use you for an example, I'm going to pick on you a bit, but so you've got a wife and 4 kids at home, and you're earning money, you get hit in the head, you can no longer do your job. Not only are you paying for all the mortgage and the bills that you had right now from the disability policy, but maybe you're not as useful with the kids as you once were. So like everything either falls on your wife to be 100% caregiver, or you might need to hire like outside help. You might need more daycare help and things like that. But there's added expenses too that I think a lot of people are very dismissive of.
Yeah, I don't think people think about the ramifications of a loved one that's inside the home, whether your spouse works or doesn't work. If you budget off of one person's income or two people's income, you need to ensure all the income.
Yep.
And the reason I say that is because if one of you goes down, it affects the other person, the entire my family, obviously, like my wife stays home, I have 4 kids. If I go down financially, we're screwed. My wife, if I don't have disability insurance, my wife has to go back to work and figure out something. She's a teacher, right? She's not making a lot of money, even if she goes back. Like, what is her plan? And I think that people just think that, okay, I have health insurance, therefore I'm good. And if you know anything about health insurance, it's a nightmare today, it seems like. But the average deductible that I'm seeing from a self-employed person is very high, and the cost of it's very expensive as well. And people have to hit that before they have an out-of-pocket max and they have this deductible that they have before insurance even kicks in. You got to still pay the doctors while you're on claim. They're still
The
going to ask
doctors
for
do getting paid, I've heard.
they do getting paid. They do
Yeah.
not work for free. And so every time you go see them, there's another charge. And obviously you're going to hit an out-of-pocket max, but those are expenses that you were not anticipating. And if I have to go to some kind of assisted living facility or whatever it might be, I have to have an in-home nurse. That's another cost that I wasn't budgeting for in my rainy day fund. And so that's why you see a lot of people start to dig into their retirement accounts because they've exhausted all their options at that point.
Okay. So we talked about the self-employed person. We talked about the W-2 employee. The third angle we could go from, I guess, is let's say that you are an employer or you're somebody that's responsible, maybe an HR person that's responsible for the employer plan. I spend a lot of time talking to these employers about like their 401k benefits. That's a little bit my wheelhouse. So what are the options for benefits package? If you're listening to this and you say, I want to extend great benefits to my employees, or at least the minimal benefits to my employees, so they have
Yeah.
something in place, what should that person know when they look at their options?
Yeah, obviously you want to work with a trusted actual like benefit consultant, I say there's a difference between a consultant and a broker, right? A consultant's gonna it's gonna educate you on what you have, what you don't have, what you really do need. And I think everything costs money, right, to a degree, but there are so many people that don't even have disability insurance plans. They might just have dental and vision, right? And medical, because that's all they can afford, the employer. And so, again, it's an education thing from the benefit broker to say, hey, this is all you have. You probably want to look at maybe a voluntary option, which is a possibility where the employer doesn't have to fund it, but they can offer voluntary short-term disability. They can offer voluntary long-term disability. And yeah, it's not going to be as robust as an individual policy because there's no medical underwriting compared to what I would offer, but I want people to at least have a plan of some sort. I see a lot of people that are in like dental offices or vet clinics or anything like that, and they're coming for maternity leave. The females are obviously, they're younger, and they don't, because they don't have any group benefits when it comes to a maternity leave, a disability plan. And so you can provide those you can offer that as a voluntary basis to your workforce. And so working with a benefit producer is going to be so vital for that business owner to just know their options.
Lots to know. What else we got?
Yeah, my biggest thing when it comes to disability insurance in general, I think insurance is the last thing anybody wants to talk about. I don't think that you and me included, I hate insurance. That's what I tell people when I first start my conversation is I don't want to spend more money on things that I don't feel I get a return on my investment. That's the wrong way to think of insurance. Insurance is simply transferring risk to a carrier for things I can't afford to come up with myself. And so there's gonna be a lot of things that, hey, when you go to enterprise, they're like, hey, do you want to buy all these insurance plans? And I've never said yes because I'm willing to have my own insurance plan take on the risk of that with my personal. I don't insure my phone. I don't insure my sidewalls and my tires, and that's burned me one time. But like, I'm not willing to insure things I can just come up with the cash for. But I will not. I'm not going to pass on insurance I can't afford to come up with. If I die, my wife is toast. What does she do? I'm not going to afford that hardship to be passed down to my wife. I'm going to insure my life for a financial gain for my, not, I shouldn't say gain because that's probably the wrong word for my wife. But I want my wife to be set up so that my children don't suffer financially because I'm not in the picture in my working years. That's the same with income protection. I want to make sure people just have a plan. And I think the industry, there's a stain when it comes to the industry, not only from a financial perspective, but like when you talk about insurance, there's a stain. There's this negative connotation with insurance that, hey, all insurance people are bad, and there are bad ones. Don't get me wrong.
There are bad
It's
ones.
there. We see so much in the news these days. The Kyle Busch thing with the IUL story is very interesting. Like that's always going to happen in every single parts of the industry. So you really got to get a trusted advisor who's willing to just break down the risk and let people decide. I'm never saying, hey, you have to buy this. I want to educate people so they can make an educated decision whether to pass on it or not. Because again, 1 in 4 of us are going to become disabled before the age of 65. That's only 25% in one view. But are you willing to risk financial future for your family and yourself to be part of the 25% versus you think you'll be the 75%?
We'll see.
Yeah.
You don't have a crystal ball for that? Yeah, I like your framing of only insuring things that are catastrophic if you lose them. I always laugh when I'll go to a furniture store and buy a couch, and the guy's trying to
Yep.
sell me the extended warranty, or we just bought a car for my wife a month ago or so,
Yep.
and they take out the pamphlet, it's a threefold thing, and they put it in front of you, and they talk about for an extra $100 a month, if you get a stain on your seat, they'll replace it, like all this stuff. And I always look at the guy and I let him finish his spiel, and I'm like, no, thank you, but it's interesting.
It's interesting. It's like I go to Costco and they're trying to sell me a phone, or obviously that's how they make their money in the insurance world is they're hoping you never collect a claim. And every year the carriers generally post claim data. And when I was at one of the carriers the last year I was there, or early last year, they paid out $150 million in disability claims. And again, like if you look at the pie chart of the reasons why, it's musculoskeletal issues, it's anxiety, it's depression, it's cancer, it's heart attack, it's stroke. And so again, we just want to educate people. I'm not worried about the couch. You should see my couch. It's completely destroyed. I have 4 kids. Like we won't buy a new couch until my son decides to not color on it, which hopefully at 4 years old here soon that he'll stop.
I think about 10 years from now, you should be in the clear.
Yeah, we don't even have animals. We just have 4 crazy kids. So I just think I want to partner with advisors to at least have this conversation. I think it's a dwindling conversation. I look at data of like how many apps are put through a carrier every single quarter, and it's going down, right? And it's not because people don't have a need, it's because it's just not being talked about. I think people don't buy things unless they're educated on the need. Now, people buy things because they might be sold something, But again, you want to be a consultant and really just educate your client.
Sure. Love it. All right, we're getting done over time here. What else do we want to cover before we hop off?
I think if could make one recommendation for every person out there that's listening to this is go get your benefit booklet. If you work with Alex, you need to send it to him because I want people to just know what they have. You would be surprised how many times you see people that, like, hey, I got life insurance. I have 3 kids, but if I die, my wife gets 25 grand. And the same is with disability.
Okay, so there's your action item. If you're listening to this, go get your benefits book, send it to one of us, and we will hopefully give you some insights on what you can do differently and
Yep.
put yourself and your family in a better spot. We'll
Yep.
wrap it up there. Alex, thank you for coming on, and we'll do this again soon.
Thanks a lot.
All right, we did it.
Securities and advisory services offered through LPL Financial, a registered investment advisor, member FINRA and SIPC. The opinions voiced in this podcast are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine which strategies or investments may be suitable for you, consult the appropriate qualified professional prior to making a decision. Individual tax or legal matters should be discussed with your tax or legal professional. Alex Wesdorf is not affiliated with or endorsed by LPL Financial or Cultivate Financial Planning.